Hi, this is Mark Carrington from mybitcoinprofits.com. This is our regular review of Bitcoin price and Bitcoin markets. You'll remember our last review, which was done on August the 2nd, we'd seen that price had surprised us somewhat and broken out below the level of the closing and had broken below the trading triangle. And we were exploring what the opportunities were for a trade. I'm just going to write in today, we're talking, it's the 9th of August, so it's 1 week later. So let's do what we normally do, hit the markets and to see what has actually happened. So we were doing our recording on this day here, was the 2nd of August, and the price was somewhere around here. And we were looking for a reversal to trade long, where this arrow is indicating somewhere in this Fibonacci zone between the 0.5 and the 0.618. And I had mentioned that it would probably be worthy of being aware that this could well have drifted down to the 786 level, which is pretty well where the box of that bottom of that triangle is. Well, what happened that day is just fortuitous. On the 2nd of August, that was the day that the market showed this dramatic drop from a high of 613. You could see that up in the top corner here. I'll highlight the lines here, go back to the bar, and we will see that change. So if you look at the highlighted pink lines there, the high on the 2nd of August was 613 and the low was 465. So a change of $140. And we all know by now that what happened is that the Bitfinex exchange was hacked. And for those of you who don't know, is the hackers stole 60 million from a Bitcoin exchange. This article here from Business Insider Australia is August the 3rd, so it's reporting the day after the event, shows this dramatic picture of a bunch of guys running away from a shop window, but that's the way it felt. So it halted all trading on Tuesday and alerted its users to a security breach. And the price plummeted. Now, why do prices plummet like that? There are a number of reasons. Is that there are a lot of people who own Bitcoin that have earned them the hard way. They do not have that very many, and as soon as they see an event like this, they sell. And when the market sees events like this, the buyers just disappear. And when there are no buyers, the price falls until such time as the bargain hunters set in and start to buy. So that was just fortuitous, and fortunately my advice had been to sit on your hands and wait for either the break up out of this zone, out of this triangle, so above this line here, and a retest of this horizontal or even this horizontal, and to enter long there, or to wait patiently until price had settled down into the trading zone. Well, price dropped way below the trading zone. So the question is as a trader, what we do about it. Well, the first thing I'm going to do about it is on my chart is I'm just going to get rid of all the lines because they are of no value anymore. So I'll leave the halving line in, and this trend line, this uptrend line has been broken. The downtrend line is still holding, so there is a good chance that we will see, and this uptrend line is still holding. So we'll just extend that out, and we will draw a new Fibonacci. And those of you who are new to trading or not accustomed to trading is that successful traders are right 55 to 60% of the time, sometimes only 50% of the time, which means that we're forever redrawing the parameters on our charts. So what I'm going to draw in here is I'm going to draw a new Fibonacci going from the last set of lows, because this low here that we'd previously drawn from, this one over here, we'd previously drawn from, the low before the halving is no longer relevant. So the low before the halving becomes relevant. The high that is out there is still relevant, and I'm going to draw in what the Fibonacci levels are. And we'll see what price has done is it's dropped down through the 786 on that dramatic day of the 2nd of August and has closed up above that line. Hasn't quite reached the 618, and it has certainly tested this monthly horizontal level. So this is a pertinent level to consider trading. Now the question is that at what point do you consider making a long trade? I'm going to draw this thing out here, and the challenge in making a trade, so we sit, even if we go the day after or 2 days after, so we've had 2 consecutive days, and I've got to blow the chart up a little bit more, we'll see 2 consecutive days. This bar here, that's the close there, and that's the close there. The closes are above halfway up, so they're both buyer bars. So they both demonstrate that there were more buyers than sellers. So the buyers are hiding here, and the sellers are hiding up here. So if we wanted to buy at this level, the challenge for us is to say, if we could say we've got 2 days of buying, so I'll buy at this level, stop loss at this level. Let's see what sort of trade size that would be. So we're buying above this level here. So the high on that level there, and I'll write this high up here, is 583. So let's just say at round numbers 585 is the high. And if we go across to here, the low on this bar here on that dramatic day, the low was 465. So in round numbers we go to 460. So to enter that trade on that day, we would need to have a stop loss that is $125 wide. And for my mathematics, 125 divided by 460 feels like a bit more than 25%. So it's just absolutely too risky to make a trade above this level with a stop loss down here. So the question is how do you even think about trading these, and why is it risky? So we've explained why it's risky is because the stop loss needs to go behind the last low, and the entry point needs to be above the last high. So that is just, it feels hugely uncomfortable. So at this point, maybe it's time to just, I'll go back to have a look at some examples and to see what the risks are in trying to trade in these situations. And we'll all remember that not long ago, on the 24th of June, we had the Brexit results, where the United Kingdom voted to exit the European Union. So on this chart here, this is the day of Brexit, and we can see the high of that day. And again, I'll just highlight where to look for the prices. The high for that day was, this is the pound against the Japanese yen. The high for that day was 160.117, and the low was 139 the low was 133.2. and we're exploring whether we should trade here. So we got, that was a seller day, there was a buyer day, there was a buyer day. So we look at going in here, putting the stop loss here. Well, let's just explore the sizes, those sizes, and to see what the trade would have been. So we're going in above this one here, which is 139.01. So let's say 139.06. I'll write that up, 139.06. And we'll look at the low here. The low here was 133.21, so I like using 13, but for round numbers we'll use 11, so 133.10. So we got 133.1, and round numbers that looks like 600 pips. So 600 pips of risk to make that trade. So we've entered in, just highlight again, we've entered in here above that high, and our stop loss is here. Well, guess what happens? Price went down like this, took our stop loss out. Now the good news though is that we've taken this low out then, so we've now got a lower low. Maybe the way to be trading this is to be trading it short. So we want to go, so we've taken this loss and we now know that we got a lower low, lower low, we're going to go short. So we're going to go short underneath here. Well, what has actually happened is price hasn't gone down here at all, it's gone this way. So at what point do we think that this trade is going to go long? Well, we don't really know, because it's now in zigzag mode. So it's doing this, 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 and the only time we can be really sure that the price is going to go long either is when it takes out some of the previous lows. It either takes out this low here or it takes out this high here. So if price goes like this, we've got a chance of believing this thing has gone long. So this price action here defines where the boundaries of trading are going to be. And as we've seen in this example is that in this particular instrument, price actually wants to keep going short. There have been fundamental reasons that have driven this. The Brexit vote is one, and the actions that the Bank of England has taken is another. Do we have similar things going on in the Bitcoin market? So I'm going to go back to the Bitcoin charts and let's just see where we are comparatively. So this is where we stand. This is our big action day, and we can see the price is fully contained by the low and the high. Now one could consider trading if you go down to a lower time frame, and I have given this a go. I've given this a go by going down the time frames. So if we go down to the 4-hourly chart, here's our big action. And basically what I've tried to do is, once I've seen that price is moving ahead in an appropriate level, and I think I made a trade at 569, put my stop losses in really tight and then got taken out. So we're in a very volatile range, and the market is clearly deciding what it wants to do. Now if we go back to our old techniques of drawing in triangles, this is what we see, is we've got a triangle that's formed in here, and the price has not yet decided what it wants to do, and that triangle is being defined by the high and low on the day of that big event. So my model for trading this is to be patient until I get a very clear sign that the price is going to go up, is going to pull back, show me a nice reversal and head upwards, even though I would normally stay away from a trade until such time as either this low or that high has been cleared. But I am prepared to trade this when price gives me a clear reversal and then a pullback. So if a pullback to this purple line, which coincides with these lows over here, is something I would be interested in trading. Why? Because I believe fundamentally that Bitcoin is going to continue improving, and this downward movement that we saw here is an overreaction, and markets always happen to overreact, and that gives traders an opportunity to make profits. So that's what my thinking is I'm waiting for price to pull back like this, show me a nice reversal, and a reversal, just to remind, is either going to be bars that look like that, it's called a ring low, a bar that looks like this, one that does this and tests this orange line, which is called a low test bar, or my favorite is a bar that goes down like that, and then we get a bar that opens like this and goes up there, and that's where I want to enter, or what will be called a bullish engulfing bar. So that's my thoughts, waiting for a reversal and not hesitating to make the trade, even though this high may not have been reached by then. So happy trading, happy Bitcoining, and be patient.